On February 26, 2022, the global financial order changed forever, and almost nobody noticed. On that day, the United States and its allies froze $300 billion of Russia's foreign currency reserves. In the blink of an eye, sovereign wealth turned into worthless digital dust. While the West celebrated this as a tactical victory, in Beijing, the Communist Party leadership saw it as a terrifying threat. They realized a brutal truth. If you hold your money in dollars, you do not own your money. You are merely renting it from the United States, and the landlord can change the locks at any time. Since that day, China has quietly engaged in the most aggressive financial decoupling strategy in history. They are building an anti-dollar alliance, a financial panic room designed to survive total economic isolation from the West. This is not a conspiracy theory. It is visible in the data, if you know where to look. Here are the 3 pillars of China's master plan to break the handcuffs of the greenback, and what it means for your wallet: the Great Treasury Dump. For 20 years, the economic relationship between China and the US was simple. China made cheap stuff. Americans bought it, and China took those dollars and loaned them back to the US government by buying treasury bonds. It was a loop that kept interest rates low and shelves stocked. That loop is broken. China has been ruthlessly selling off its US debt. They have dumped hundreds of billions of dollars in US treasuries, bringing their holdings to a 14-year low. Why does this matter? Because the US government is addicted to debt. We need China to buy our bonds to fund our deficit. When China stops buying or starts selling, the US has to pay higher interest rates to attract other buyers. The hook. China knows that by selling treasuries, they are slowly bleeding the US economy. They are forcing the Fed to keep rates higher for longer, which crushes the American housing market and banking system. The punchline. They are no longer willing to fund their own rival. They are cashing out their chips before the casino closes. The shadow. Plumbing sips. The reason the US dollar is powerful is not just because it is a currency. It is because the US controls the plumbing. The global payment system, SWIFT, is dominated by the West. If the US kicks you off SWIFT, you cannot send money internationally. It is economic death. Just ask Iran or Russia. So, China built its own plumbing. It is called CIPs, Cross-Border Interbank Payment System. Think of CIPS as a backup internet for money. Right now, it is much smaller than SWIFT, but it is growing at an exponential rate. China is forcing its trading partners Russia, Brazil, Saudi Arabia to settle trades using CIPS and the UN, completely bypassing the US banking system. The hook. This means the US is losing its X-ray vision. When trades happen in dollars, Washington can see everything. When trades happen in yuan on CIPs, the transaction goes dark. The punchline. Sanctions only work if you control the pipes. China is building a pipeline that Washington cannot turn off. The real asset rush. If China is selling US dollars, what are they buying? They aren't buying euros or yen. They are buying the only asset that has no counterparty risk. Gold. The People's Bank of China has been on a historic gold buying spree, adding to its reserves for 18 consecutive months. And those are just the official numbers. Many analysts believe the real amount of gold disappearing into Beijing's vaults is 10 times higher. But it goes beyond gold. China is stockpiling everything: copper, iron, ore, grain, oil. They are converting paper fiat currency, which can be sanctioned or devalued, into hard, physical commodities that sit on their own soil. The hook. This is the behavior of a nation preparing for war, maybe. Not a kinetic war, but definitely an economic siege. They are filling the pantry because they believe a storm is coming. The punchline. You cannot freeze a bar of gold sitting in a vault in Shanghai. You cannot sanction a warehouse full of copper. China is moving from a financial economy to a physics-based economy. The impact on you. The bifurcated world, so why should you care if China stops using the dollar? Because the standard of living in the West is subsidized by the dollar's dominance. Because every country needs dollars to trade. There is a constant global demand for our currency. This allows the US government to print trillions of dollars without turning into Zimbabwe. We export our inflation to the world. If China succeeds in creating an anti-dollar bloc, that demand evaporates. The dollars that are currently circulating the globe will come flooding back home. When the supply of dollars at home spikes and the demand abroad crashes, you get structural inflation. It means higher prices for gas, higher prices for electronics, and higher interest rates on your mortgage forever.